What's up, guys? Welcome to the Knowit Owlz group call. This might turn into a YouTube video, might turn into a regular video. We'll see who comes on. Got me and JT over here.
What's up, guys?
We got Coach Chris and Coach John. We got Jebediah. And we're just kind of going to talk about how we're navigating the current landscape, maybe give our thoughts on the market. Chris, I know you have to jump off here pretty soon. Are you? Did you take advantage of the dip? You doing anything different?
Yeah, I took advantage of the dip. Not doing too much different though. So I was telling you guys before that I was taking a larger or re-entering my position in Velo and Arrow, who had I think like 40-50% dip Monday due to the Japan carry trade unwind. And those have done really well. So I was buying in the secondary market. So I bought more V Arrow, V Velo. A little bit of leverage on there, but overall, just good. They went below the price point I had, and then probably should have bought ETH, probably should have bought Bitcoin, but did not do those things yet, and we'll see how the market goes. But otherwise, just mainly doing concentrated liquidity stuff and a little bit of checking out. Like, is this only for concentrated liquidity, or is this other stuff we're doing?
Whatever.
I've been doing a little deep dive, more fundamental analysis into the, I'll say storage space, or like Filecoin, Arweave. There's one more I can't remember, but I've been really enamored by Arweave lately. They just did, they're doing a fair launch, which is pretty fair, for a new token. They have, based somewhat on Bitcoin's mining structure, or I think they have 21 million tokens or something like that. And you just have to wrap staked ETH, and you're going to get some portion of the rewards or tokens that unlock in February 15th or so. So I think 36%, if you really believe in Airwave, you can use Airwave tokens to earn a little bit more allocation, but just wrap staked ETH, drop it in the pool. It has definitely some VC backing, but overall, you're getting the same token allocation as them. There's no tokens allocated to VCs. There's no tokens allocated to the DAO or the team or anything. So everyone's farming equally in that regard. So it's pretty good. It's my bet on the storage space. They also have the best stats out of any of the storage providers. So I'm pretty interested in what they're doing right now. So, yeah.
Is it storage in general?
They say they're creating like the most the AO, what is it called? AO machine is really going to be used. They're really pushing it for AI usage, and being the back end for what do they call it? Not admins, but agents, AI agents that are going to be on chain. They've had pretty good test net for people building out some AI tools on chain, using different agents to do various things. Mainly they're talking about trading, but building out NFTs, or making NFTs for people, et cetera. And then right now, the Arweave network is doing, I think they do most of the storage, and there's a term I don't remember off the top of my head, sorry, for Solana. So a lot of Solana NFTs use them as the back end right now for their, if they do on-chain storage. So yeah, it's been going pretty well for them.
Nice. Okay.
Definitely something to look at, even if you're it's just a great place. It's an interesting place to put ETH if you have ETH laying around. So.
Definitely got a lot of that, especially after this dip. I'll kind of talk about what I'm doing, and then John, I'm interested to see what moves you've been making. So I'm actually share my screen here just to kind of give a little context.
I'm curious before we move on completely from the storage narrative. Chris, what would be what have you seen? Is there something that's okay, maybe I should jump more into the storage space, or is it just you feel like because you haven't put that much attention to it over the years, this is just that point for you?
So I'm gonna give a sort of a long story, but a quick long story. I actually was trying to do participate in decentralized storage in 2017, 2018. There's a company called Storage that I was a node provider, which means I let people use my excess memory, or the storage.
Yeah, I remember I made 100% in 2 days on that one.
On storage.
Yeah, on storage.
Back in 2021, I remember
Yeah,
that.
2021.
Oh, okay. You guys were doing it at a good time then, because it was not 100% play in 2017, 2018. But cool. That's awesome. There was them, and there was like two others, and I was trying all of them out. So I thought there was a usage for it. I definitely like storage. It didn't do bad. It just like they just didn't do anything for a long time. So great that you guys did good on the token. I kind of like gave up on it by that. I was done looking at it. But now to come back to it, I was checking out Filecoin a while ago, maybe 2-3 months ago. Wasn't really impressed. And then Airweave has been something I did not really take a look at until maybe probably past 2 weeks. And specifically because they're doing the token event, the token launch in February, that I'm taking any interest in it because it's pretty priced. It's priced well, I'll say. I think it's priced well right now. But their agent and AI play is something I think is interesting. It's another way to get exposure to AI in a company that I think has done well, and I think they have a good team behind them, what they've been doing. So that's why I've like started taking another interest into it. I'm probably going to be looking more at what is going to survive the AI storage bubble in the near future. I think they're one of them. I think there's going to be a few others that pop up in the next, I don't know, couple months that either haven't launched or have launched and are trying to get users right now. So it's just my beginning to look at AI and storage plays. So I think those are the next interesting things for me. Yeah.
Fair. So here, let me share this here real quick. Okay, so
Ooh, got charts.
yeah, if we I know you're not a big chart guy, but
No, I love a chart now, man. I love a chart. What are you talking about?
nice. So we made a KIO macro video yesterday. Links in the description if you guys want to check that out. Where we kind of broke down our thoughts. Well, mainly JT broke down our thoughts on the Japanese yen carry trade that you mentioned earlier, Chris, and just things that are going on in the world. And it looks like things are kind of bouncing back. We had this steep fall, but things are kind of starting to recover right on top of this trend line. We're still below our 2 major moving averages here. But if we go like right to crypto, we saw Bitcoin go right down to our 62 EMA, which acts as like the mean. It went below 50K. And in Floatlocker or John, on our last call, we were saying like we wouldn't be surprised if we saw Bitcoin go below 50K. And that's exactly what happened. And if we look at ETH, this is really significant because it touched a trend line that it's been respecting since June of 2022. And, I always like to say, like, when you're looking at a chart, you're looking at people's fear and greed, like their emotions. And I always like to say, like, the longer the base, the higher the chase. Like, in order for people to get greedy, they have to be fearful. So it's a lot of fear that we just saw. And in every single bull market that we've had, whether it's the 2020, 2021 bull market, 2017, doesn't matter. There is always drops of 20 to 40% in Bitcoin and ETH, and even larger in altcoins. So what I did was I scooped up a lot of ETH at 2100. I doubled down on my leverage position, and I'm levering up on Aave, or not Aave, on Radiant. I'll just kind of show you guys here. Here we go. So the cool thing about borrowing on Radiant is that you get to earn passive income to borrow. So what I did was, so it shows you your deposit yields where you get paid 3% in ETH when you deposit, and then you get paid 4.7% in the Radiant token. I believe in Radiant. They're omni-chain borrowing and lending platform where you can do it on different swaps. And they're also a real yield protocol where they share a portion of the revenue, and they're giving out airdrops in layer 0, which they're built on. Using this protocol was a big reason why I got such a fat layer 0 airdrop, because I have been using it since they launched, literally since the day they launched.
I'm sure you showing me it, but back when they launched, yeah.
Yeah, and then they're also giving out, they were giving out Arbitrum tokens for a while too, because once Arbitrum launched their token, they were one of the top TVL projects on Arbitrum, so they got a pretty big allocation. So when you do the math on this, I use mostly ETH as collateral, but also has some USDC as collateral, because had I not, I would have gotten liquidated. And you want to have some USDC as collateral so that once the value of your dominant collateral, in my case ETH, drops, you don't get liquidated. So
Can I ask you a question real quick?
sure.
Yeah. So with the liquidation on Radiant, you said, I'm assuming you were doing an ETH loop of some type, right? Or were you doing something else?
So basically, I have some Arbitrum, my Arbitrum on here.
Yeah.
I have my ETH on here, and I also have USDC. And I will borrow USDC, sell it for ETH,
And then
deposit.
create the loop. Okay. And you would have hit your liquidation mark if you didn't have other collateral types than ETH, specifically USDC. Okay, that makes sense now. I'm sorry. I was trying to catch up.
Like right now, where things stand, in order for me to get liquidated, ETH will have to go like near like $500 to $700 or something like that.
That's
and even if it starts to make its way down there, I'm just going to be adding collateral to it. Like I always advise, like if you're going to be using leverage, you want to have enough collateral to where if it goes to zero, you're still good. It doesn't all have to be on the platform, obviously, but you never want to get caught swimming naked, as Warren Buffett says. So, with this platform, we got someone joining here. Let me go ahead and let him in. Oh, Chris, perfect. I'm glad he's coming. I wanted to talk to him. With this, in order to get like the platform revenue, you have to lock what's called DLP. I think it stands for daily liquidity provisioning. It's where you have to put Radiant and ETH in a pool on Balancer. 20% of it is Radiant, and then you get to take a share in the platform's revenue as well, which is pretty cool. So like last time I did the math, I was getting paid around 5% just to sit in this leverage position. And once ETH starts to hit my price targets, then I'm gonna start unlooping and then kind of start, going into other altcoins. And then just like real quick, I did scoop up a lot of Pendle on the dip. I got Pendle when it was right on this red line. So at $2, it went up like 50% today. And the TVL on Pendle is still way higher than the market cap. So it's still undervalued. It's still being used. And the biggest thing to note is that while we did have this big drop, it has nothing to do with the fundamentals of the technology. It had everything to do with external factors and things like that. So that's kind of what I'm doing. Chris, my good brother, how you doing? I did today because I wanted to talk to you about it.
Okay.
I know you asked some questions in the school. So feel free to ask any questions and kind of let us know what you were doing. I remember in a post you made, you said you were in some interesting positions that we wanted to talk about. So I'm happy to explore to hear about what you're doing and how you're playing this dip.
Yeah, buying, man. That's what I'm doing. So I actually set up like a kind of a self-repaying loan through Aave to where I built a calculator so that I knew because how much I could borrow and lend in a worst case scenario so that the interest on the lend would still pay off the loan and I wouldn't have to worry about liquidations or anything like that, because at the moment that particular strategy is stable in, stable out. And so basically what I did is I took a large chunk, put it into Aave to lend it, and then I sent a bunch of that over to Spritz and offboarded and bought a life insurance policy. And then the life insurance policy allows cash access to over half the value this year. So I pulled that out, and then I put that right back into Aave for more lending in kind of a outside of crypto loop, because you were just talking about the indoor crypto loop.
That's crazy, man.
And then so all of the money from the life insurance policy is guaranteed at an increase of 6% a year, regardless if there's a loan against it or not. And then the repayment terms are on my terms. Whether I pay it back or not is up to me. But I'm basically earning on 1.5 times my money while of the entire cost of life insurance policy. So I'm earning on like 50K right now.
Wow.
And I have 32K of it in the life insurance policy. So like my life insurance policy cost is being slowly repaid without ever leaving Aave. I just go in there every single week and just say repay loan from the earnings from my lend, and it's paying it off without me having to add external capital or anything.
Wow. How did you discover that strategy, man? Like what made you get
I like playing with numbers, and I was looking at the borrowing and lending strategies, and saying, well, I can do a little interest rate arbitrage, and as long as my lending is high enough to cover an extreme case of the borrowing APR, then I should be fine. So I go in there every week, check out the APRs. Aave allows you to switch your underlying borrow. So for instance, this week, it may be cheaper for me to borrow USDT at like 5.25. Next week, it might be cheaper to buy DAI at 5.15 and USDT has jumped up to 9. But you can switch your borrowed assets to the lower interest rate. There is a cost for doing that. But if the interest rate jump is big enough or the savings significant enough, it covers that cost. So my insurance policy is paying itself off.
Wow. That's interesting, bro.
Very, very cool. That's a cool hustle.
And you can do that on any big chunk saved amount of money. Honestly, I'm thinking, once make some more dents, taking some extra actually out, and put a really, really good position into Solana right now with a very wide range, thanks to Float's guidance on that. And it has a really defined endpoint. So as soon as Solana hits 168, then I will have 20% profit just on token appreciation for when I bought back in at this dip, as well as all the fees along the way. And right now, the fees along the way are, yesterday, they were about 2.35% a day. Today, they've slipped a little bit. They're down to about 1.65%. So,
what's your range right now?
My range on that one is 138 to 168.
Okay, nice. Yeah, I'm at right now my range is 118 to 500.
Whoa.
And I was earning, let me just do the math real quick.
You planning on it mooning, huh?
I mean,
Well, in my in the Sol USDC thread, I've been farming it since 191, right? So I went very heavy in USDC, or just single-sided initially, and as price came down, I re-ranged, went wider until we got down to 118, and then I went at that point I was re-ranging back to 118 to 500. Initially it was like 191 to 150, I believe, and then it got wider. Then at 118 I was at a full bag of USDC. I re-ranged it to go super wide, 118 to 500. That way, on the way back up, I hold more Solana on the way back up, so I get more price appreciation because I'm holding more Solana on the way up. Not only am I getting fees from farming the yield, but also gaining profit from the appreciation as well, right?
what's the current APR, APY on that? Like that big of a range right now?
Yeah, so on Sunday, I was in the 0.01% fee tier. And that was about 100% on average APR.
With that big of a range. I mean, this week was insane, but that's awesome. Okay.
No, initially. And then on Sunday, I migrated to the 0.05% fee tier. And I posted a screenshot in the Solana thread, but the APRs were well over 300%. But I was seeing closer to 500% APRs. And then what was it, on Sunday through Monday? Hold on one second. Let me just do a little math here. I was seeing about 200% APR on a $118 to $500 range in Solana.
I know. It was crazy. The volumes that day was like 118 million in the pool that I was in.
Volume and the volatility.
Yeah,
was insane, right?
Yeah.
And not only that, not sure, like I did a live stream right on my YouTube channel, and I show in Metrics Finance there's on Ethereum. I showed on Ethereum, and I think on Solana as well, but on Ethereum, for instance, a big chunk of the liquidity Here, let me just share my screen. It'd probably be better if I just do that. So let me do that real quick. But
Yeah, I'm
there
sorry.
was
I'm sorry I missed your live stream. I was planning on. I have like little bells that go off whenever you go off, so to
oh
speak.
yeah,
I
Yeah.
missed my bell. So
it's all good, man. I tend to do it at random, so it's like, you know, the market was on fire, and I'm like, you know what, you know, let me just talk about this, because the yields I was seeing were insane on Ethereum USDC, for instance. I was seeing up to 3,400% APR, 3,400% APR on Ethereum USDC.
That's crazy.
And the
Right.
reason why is because the liquidity distribution
Yeah, it was off.
on Sunday, it's still off. Look at
Oh
it.
wow, it's still too big.
So
Man,
yeah,
the
like,
liquidity
over
provider
here,
sleep.
No, they're not. They're worried. It's like too much vol right now. So
yeah, over here,
yeah.
that's 3,100, 3,200, where
You
the
can
liquidity finally gets thicker. Down here, it's starts around 2,200 and lower, right?
People polarized. That's crazy.
Yeah. So right here is a prime opportunity to be farming the
Wow.
yields. I've actually been thinking about migrating to mainnet, because this is mainnet. This is showing mainnet. Base is a little different. I'll show base in a second, but uh,
5.
on Sunday, this price range here was a lot lower, right? So there was very low TVL, and on base as well. Base was very low as well. And once we broke through like 2,600, you know, I see the liquidity distribution. I'm like, I was about to rearrange, and I was like, well, you know, I was thinking like, should I go to a higher fee tier? I did it on ETH, but some people have told me that they were seeing over 4,000 4,000% APR for the entire day, right? That's not like even like for the hour that, or a couple hours where Ethereum is really volatile, right? That was for the entire day. I was like, shit, man, I missed a big opportunity there. I mean, I still made, you know, some decent money, but that low TVL is key because the volume was high. And what I saw here, you know, everyone talking about jump trading, dumping Ethereum. When price got to 2,600, they were selling. The way they were selling was very methodical in a way. They were doing it in clips in a way to get price lower and lower, right? Mm-hmm. And once they broke through this like 2,600 liquidity level, price just freaking went haywire, right? Because there's no liquidity here, so it was just bouncing around. You know, I got my own like tinfoil thesis on it. I'm thinking like maybe they're exiting Ethereum spot, right? And then hopefully they can get price lower, right, to create that fear, get it lower, and then maybe buy back the Ethereum, maybe either through an ETF or who knows what, right? But it just seemed very malicious in that sense, right? Like the way they were selling was just very odd, and they were doing it on a Sunday night.
Most illiquid day of the week. They did it purposely on that time.
Yeah. And on Sunday they sold, I think, like $40 million worth, but in the past couple of weeks they've been selling, and I think they sold like nearly like $500 million, right?
Yep, it's like 400 million or something like that.
Yeah,
over the past 2 weeks. Yeah,
exactly. Yeah, so it's just kind of odd, right? And then they finally got, you know, price over here. I don't know what they plan on doing, obviously, but anyways, with that low TVL, I was like, okay, well, I'll just keep my Ethereum position in the 0.05% fee tier, but on Solana, I decided to migrate to the 0.05% from 0.01%, and it boosted the yields like crazy. Yeah. So it was like I always hound on, you know, usually when people see these market moves, they're like, oh my God, I got to get out, right? As a liquidity provider, you know, as a trader, obviously, yes, you have your stops, you got to get out, right? But as a liquidity provider, you look forward to these events because the liquidity is low from so much fear, right? There's probably all this liquidity sitting on these ends of the ranges here. There's probably like bigger traders, institutions probably just sitting like, you know what? Let's not make a rash movement yet, and let's just see how this all plays out and settles, right? Will it go lower? Will it go higher? They don't know. But the worst thing they can do is take all this liquidity, put it into this range here, and then get blown out to the upside and take on all that impermanent loss, lock in all those losses, right?
I've been looking at Crystal, researching wallets for this, and there are so many large wallets out there that no matter what, they set a very wide range and they leave it there for an entire year without like touching it. So I think a bunch of that liquidity in that particular pool could be some of that. And I know you're making, a 4-digit APR on your position. I'm on base, and just I'm in an ETH pool, 0.05%, and I'm going to be happy with my 419% APR.
Oh yeah,
So,
my APR has dropped significantly. They're around. They're still around that.
This is in the last 5 hours.
That's crazy.
I have a question for you guys. Are you guys deployed LPs on base? This is the first question.
On base?
Yeah, on base.
Yes. Yeah, this one, this pool right here is wrapped ETH USDC 0.05% on base, and the last 5 hours I've made 419%.
Okay, that's still amazing.
I'm on base as well, and here I'll do the math real quick.
I'm curious about the volume right now because it's Airdrome Slipstream has like 60%, 70%, 60 to 70% dominance now, and you're still hitting 400% APY, APR, whatever, which is awesome. So it's like very interesting to see that they're losing on base. Uniswap is not the most volume anymore, but it still produces all that APR, which is awesome. So
yeah, that's actually a good point right there that you bring up, Chris, because I was on Aerodrome for until Sunday. And, as price got to like 2,800 to 2,600 around there.
Okay.
I was just seeing like 100. I did a thread on Twitter on this comparing, but I compared the volume profile and the fees from Uniswap to Aerodrome, and Aerodrome was paying about 175%, and at the time Uniswap was paying 225% in the span of about 4 hours, I want to say. And then I was like, okay, well, if Uniswap's paying higher, I'm just going to go over to Uniswap, right? Not only that, but the volatility is picking up, and being in the Aerodrome 0.04% fee tier just didn't make sense, right? So I was like, okay, I'm going to move over to 0.05%. And
were you staked or were you not staked? Is it on Aerodrome? That's all I wanted.
I was staked. I tried both.
Okay.
And they both pay really well when there's low volatility.
Yeah. Okay.
Aerodrome pays pretty well when there's low volatility.
I was going to say, I haven't done the math yet, and I was not in this position, so I was not behooved to do the math. But I think you would have made equal to or more unstaked due to this high volatility. But usually, you're right on the other thing you're saying.
Yeah, because during times like a week ago, a couple weeks ago, there wasn't a lot of volatility, but Aerodrome gets a ton of volume. It gets double the volume, and that volume with the low volatility, you're not really touching or being able to get to the other ticks on a 0.3% pool, right? Okay. So with Aerodrome had the upper hand there. So that with all the volume, you're able to get more fees in Aerodrome, right? And I was seeing like double the fees, right? So that was good. But once it started shifting and this move started coming, I was like, okay, let me move over. So I staked on base, and I went to a 2,400 to 3,700 Ethereum USDC range, and then as price got to 2,600, I'm like, this thing looks like it's gonna break through and maybe even break through my 2,400, because I saw the liquidity profile. There was like no liquidity below 2,600. I'm like, I need to move quick. So I went to 2,100 or 2,190, I think, to 12,000. That range. And when the shit hit the fan, I was still seeing 3,400% APR in that wide of a range. It was insane, man. And
man, that's cool. That's so cool to hear about.
And then I did it on my live stream. I didn't show that move, but afterwards I was showing it. I was showing showing my real live LP position and just showing how I was gaining yield with such a wide range, right?
Yeah.
And
while I was at Costco, you were out here making big boy trades, man. I love this. Okay.
yeah, man. Like I'm bullish on ETH, like long term, and with the the Ethereum ETF, which was a big surprise for me. I was certain it was going to be denied. I was like, there's no way they're going to approve it, but they did, and that just further immortalizes or just sets it in stone that Ethereum is here to stay, right? And it's a credible asset, right, to invest in now, right?
Yeah, once they built that BUIDL fund, once BlackRock built their BUIDL fund on ETH, I was just like, okay,
yeah,
and they're expanding right now to other chain. Like they're trying to get the BUIDL fund to be on Arbitrum, I think Optimism, and maybe they'll probably Base.
Right?
Yeah,
Sure.
it's like weird seeing like the joke is like I'm my company I work at right now at my day job is on Arbitrum. I know people that work on projects on Optimism, but the VC / the zeitgeist is all like Ethereum equals Base now, which is just fascinating to see. It's interesting. They're probably going to go to Base, like you said, and it's just they had Base Camp maybe last week, so the big festival for Base, and all the institutions were there. It's like a very different world now. So.
Damn, so you're not at Premium anymore?
No, I'm still no. My day, yeah, Premium still, but we're mainly on Arbitrum. Like everything we do is on Arbitrum.
Oh, got you.
Yeah,
okay.
my bad. So, but the funny thing, I do most of my work now is with Arbitrum governance. So I do a lot of stuff for them. So yeah.
Oh man.
Yeah.
So are you like in cahoots with Arbitrum and Base, or just?
Well, I mean, I have my largest personal position is in Aerodrome and Velodrome, which is Base Optimism. So I follow that a lot. And then the place I'm actually at right now, the ABC Blockchain Center Atlanta Blockchain Center has a whole bunch of people that are building on Base right now. So I follow the ecosystem of Base pretty aggressively. And then Arbitrum, it behooves each protocol to have a delegate to pay attention to what's going on in Arbitrum governance for incentives, for large changes, etc. So.
All right, cool, man. So like when it comes time for us to dump our bags, we'll just wait for the safe word.
You should dump them now. Not financially. No, it's I would tell anyone, once again, not financial advice. Anytime there's an incentive program going on, and there's like 3 or 4 right now, probably sell every time you can and buy back once it's over. And then for you guys, if you're interested, if you do like Arbitrum as a more fundamental, like long-term hold, they're about to finish their incentive program about a month from now, but they're going to stop providing large general incentives for the next 3 to 6 months. So I think they've been giving out, I don't know, every 3 months they've been giving out like $100 million in tokens, 100 million tokens, I don't know, in tokens or so. They're going to be stopping that, reassessing how they want to give out the tokens, give out incentive programs, etc. Until the end of the year. So there won't be another incentive program until at least 2025, probably.
I'm happy about that, man.
And
I got a pretty large Arbitrum position.
Same.
Yeah.
I want some more on the dip. Hit all-time lows.
So, and then I think if you guys own it and don't delegate it, that's I'm a delegate to me. But the other thing is they're trying to make delegated Arbitrum yield producing. So either direct incentives from the DAO, like the actual DAO, or making it usable as collateral on places / tradable and stuff like that. So they're trying to make it more user friendly for people to delegate and earn yield on their Arbitrum. So because if you delegate right now, like my boss has we have like 9 million Arbitrum. As we're going off topic, 9 billion Arbitrum. It's just you can't do anything with it. You just have to delegate it, and that's all you can do with it. So it'd be really helpful to be yield producing for teams. Yeah. Yeah.
Very interesting.
Is that a different token symbol, or is it just straight ARB?
It's like it goes into a contract, and it's just straight. It's considered straight ARB. It's like OARB, I think, or I think they have to call it OARB for the token, but it's non-transferable. Sorry, yeah, it's non-transferable. Actually, wait, I'm sorry, that's wrong. That's different. When you delegate, it is like a signature. So you're just signing a transaction. you can move it, but then it'll reset your delegation. I'm so sorry. But if so, like for instance, if you wanted to put it into Aave to be a collateral, that would remove your delegation at that point from your voting power would go to 0 at that point. So yeah.
Got it.
Yeah, sorry about that.
Yeah, no, it's okay. Speaking of something on Arbitrum, did y'all see that promotion they're doing for the iPhone right now? You can get your share of up to $3,000. I don't know if y'all talked about that before I got here.
What is this?
So iPhone is a program that you run on your phone that you get for free, and you have to do 3 actions for locking up $100 of 3 different tokens on the Arbitrum network for a period of 7 days. And then you will get your share of the pool of the $3,000. It just came out. Actually, there's a post on it on Medium right now on getting that done. So I didn't know if y'all knew about that.
Can you look at it? I think I found it, but
Yeah. I'm pulling it up on my phone.
So much going on.
Because I was reading about that, and I came across. I was like, yeah, okay, I'll go do that. So
you can get rewarded for that. Solana phones were like $30,000 if you bought a Solana phone. You got like airdrops. Yeah.
Yeah, it paid for the phone.
Airdrop for buying the Solana phone?
So if you bought a Solana phone, you got like you got like so many airdrops. Yeah. So
I got
that much, but
man. Did you get it?
I know I didn't buy any. I have a friend who bought 3 in the bear market. So like when it happened, he bought 3 and then he just tagged them, and then he said he got like something from $20,000 to $30,000 per phone or something like that in airdrops. So I don't know if he sold all the tokens and all that, but yeah, it's crazy.
No, I didn't get that much.
Oh, you didn't get that much? Maybe he's lying. I don't know.
I heard some people did though, but yeah. But yeah, I got some
cost
of the phone and the Solana, what is it? Solana, I forgot the name of it. But yeah, it's supposedly more things are supposed to come for it, more airdrops.
Yeah, what's cool about this one, Vincent? I thought you'd be all over it because they're doing it paired with Radiant. It's a iPhone / Radiant collaboration for the $3,000 rewards.
No, send me that. I'm gonna go on that. Actually, I didn't hear about that.
No.
Yeah, I need to find where it is. I have like 10,000 tabs open, so it's gonna take me a second. But
2 types of people in this world: the 1 tabbers and the 10,000 tabbers.
Yep.
Ladder camp as well.
So, but yeah, no. What I was actually looking for, because you were recommending Radiant, and I was seeing, that maintaining a 5% lockup of their DLP could be problematic depending on the pricing of the tokens. But what I wanted to do was lend my ETH because I don't want to spend any of it. I want to build it up into a bag, and then I want to use that as collateral and borrow ETH so that the loan health is easier to manage. Still not take out anywhere near the max loan value because of an accidental DPEG or something leading to liquidations, but either borrow a straight out ETH or wrapped ETH or some sort of ETH LRT, LST, something, and use that to go farm with. So I was looking for kind of the best solution to put that into place.
Right. So here, let's go through the questions you asked here on school. And,
I ask a lot. You can just say forget about that.
I was gonna say before you go to questions, I literally do what you're doing. Like this is the strategy I'm deploying right now. So this is fun to hear about. Yeah.
Well, Chris, if you want to speak on it, because I know you said you have to run, I can go through his questions after.
Actually, well, give me 1 second. I don't know if they're gonna kick me out because I've already passed my point. One second.
Okay, so while he's doing that, the first question you asked was, is it best to leverage with the 4x loop if I'm lending / borrowing on ETH on each side of the equation? So by the way, I never do their loop. I always do it on my own. And each time I loop it, I borrow a little bit less because I don't know if, I would imagine that they do the max TVL or the max loop that you can do, which is horridly stupid because like, let's say ETH drops like 5% or 2% in 1 second, which could happen at any second. You just get liquidated right when you go into the position. So I would never recommend doing their loop. I always do my own loop. and I looped it 3 times, and each time I did around 15% less, just so that, like, what I did was I deposited ETH as collateral, I borrowed USDC, and I went on the Uniswap and sold that USDC for ETH, redeposited, did the same thing 3 times. I also have Arbitrum on there as collateral. I have a big chunk of USDC on there as collateral, just in case, because, you know, I'm borrowing ETH. So as ETH is dropping, my liquidation score, whatever you want to call it, is dropping as well. So I like to have some USDC on there. In terms of the 5% locking, me personally, I bought Radiant the day it launched. I made videos on it like that back in the early days when it like 20x or whatever. So I'm bullish on the protocol. I do think we need an omni-chain borrowing and lending platform. I like that it's a real yield protocol. And I also like that once you go and do the DLP, it's not like 50-50. It's only 20% Radiant. If it was 50% Radiant, 50% ETH, a little bit more uncomfortable with that. But I don't mind it. And I do it, I lock it 1 month at a time anyways. So it's like, that's kind of my thoughts on it. So if you're not bullish on Radiant, I wouldn't do it if I wasn't. But since I'm bullish on Radiant and I do have a bag of it, I don't mind locking a little bit up to get an extra yield.
Yeah, and those extra yields actually really do make it worth it. But you're saying you have to have 20% Radiant in that DLP lockup?
Yeah, that's how it automatically works. And once you're going to like if you go to deposit and you have like your leverage positions on there, it'll tell you how much you need. It'll say, hey, by depositing this much, you render yourself not able to get the, you know, rewards or however they word it. So they tell you how much you would need to lock up. I usually try to stay around 6 because, you know, things are volatile and at any moment I can be below it. And it's the difference of paying to use leverage and getting paid to use leverage. So.
Got it. Okay. Yeah. Yeah. I was just, cause I was looking at that, and a lot of people are recommending Silo, you know, for security purposes, but they don't have as good interest rates on the lending borrowing on Silo that they do on Radiant. So I was thinking Radiant was a newer product and they were trying to boost the usage by offering higher interest rates, but that's just my thought.
No, that makes sense. Yeah. I prefer Radiant. I'm extremely bullish on Radiant. So that's part of the reason why I'm doing it. They're real yield. And I was farming on there for a while. And like I was telling the guys before you hopped on, all the stuff that I have been doing on Radiant post or pre layer 0 airdrop is the reason why I got such a fat airdrop. And anytime projects are doing like incentive programs, like Arbitrum, I got a nice amount of Arbitrum from using the protocol. And I'm going to get a nice amount of layer 0 from using the protocol just because of the positions that I'm in now. So it once you do all the math, I'll probably end up earning around 50% just from the activities that I'm doing when you add in the yields that I'm getting to use leverage and all of the airdrops from the incentive programs.
Yeah, I felt like I missed most of the airdrop farming at the moment. So
yeah, probably, but
there's some still. There's still some. They just got a lot harder.
Yeah, like I looked at it and like I was just having a shower thought. I was like, what is 1 Renzo point worth? Like,
yeah.
So Chris, if you want to go ahead and talk about the strategy.
Yeah. So I'm so when you mentioned you're a lending guy, like an arbitrage rates guy. So it's very interesting to hear your thoughts on things. I don't think about it in the exact same way, but it's cool. But for the same asset lending and borrowing, I do that a lot with my ETH bag now, where I use it as collateral. This thumbs up thing is creeping me out. I use it as collateral on Aave, either on off or basis. And I'm either or is fine. Sometimes I care about the interest rate, but I have a collateral on both those. And then I will take out a loan in ETH or wrap staked ETH, depending on what I'm trying to do. And right now, I've just been using that I'm using this to farm Arrowweave right now. But before that, I was playing the points game a little bit, trying to understand how that whole LST stuff, restaking stuff works, and not taking a lower, not having to sell or deal with all the ramifications of that. Additionally, some people I haven't done this. Well, I guess I technically just entered into this, but additionally, people have been creating what do they call it? Repayment loans. Self-repaying loans, self-repaying loans with Aerodrome, where they're usually using USDC or a large ETH position, and they use ETH or USDC or a combo of both, and they take out they borrow on that into US dollars, buy an Arrow or Bello position, and they use their fees to pay that back, and it usually gets paid back in about, I think, 8 months, something like that. 8 months. You can do the math. You have to do the math yourself. Actually, I haven't made a spreadsheet recently, but I used to have a spreadsheet for that. But a friend of mine was showing me that as another way to create self-repaying loans and still creating a lower risk. I'm very bullish on Aerodrome, very bullish on Velodrome, etc. So that's like my equivalent to his Radiant or Pendle or whatever. But even who is the other? There's another provider, Alchemix, AL USD and AL ETH. They're like a big provider of repaying loans. They've also put out documentation on how to do the repayment using Bell and Arrow as well, based on their relayer. So they're trying to build products around that as well, and that's what they're known for, is repaying loans, self-repaying loans. So there's a lot of protocols that are starting to get interested in how to utilize self-repaying systems like that. So anyways, that's like my high horse moment. And also Silo sucks for
Silo sucks.
Interest rate. It's great because it has a ton of different assets. That's the best part about Silo. For instance, I work at Premia Finance. We have Premia token. We get it's starting to invest for me. It's starting to unlock for me on my vesting tokens. I can shove it into Silo and I can take out a loan, and with some barriers, I don't really care. And take out and use the assets. That's really nice for Silo, but otherwise I'm not there because I'm going to get a high interest rate on it.
I wish I could deposit my Dependo on Radiant. I would use so much more leverage.
It's a blessing in disguise, man. It's a blessing. Like, it's never going to go below $2 or $2.50 or whatever it was, and then you're fucked up this last time. So like, it's a blessing in disguise. It's a blessing in disguise.
Yeah, I picked up a bunch of Pendle too. I'm bullish about that. And I want to get into Ondo as well, but
yeah. Can someone pill me on Ondo? Like, why? What is amazing about Ondo?
I don't like it.
You don't like it? Huh?
That's all you, Chris. Because it's like, why not just go and buy the fucking treasury? It's good if you're a foreign investor. I would say that. But as a U.S. investor, I could just skip the middleman, go get the treasury, get the yield on my own versus having to break off onto a piece. Is how I look at it.
Yeah. Well, it's armchair management.
Yeah.
So people want Ondo for armchair management to make it easy on them. It's like why would you buy a loaf of bread for $25 from Amazon? Because it can be there the next day and you don't have to go to the store. Like, it's the same thing with Ondo. Like, it's 100% convenience.
Yeah, that makes sense.
Yeah.
And they are spearheading the tokenized treasury narrative, which is big in and of itself. So I respect them for what they're doing. I really do.
But you don't like them.
I'm not gonna say I don't like them.
You just said it.
You're right. I did say it. I'm gonna edit that out. No, I'm just kidding.
You know why he doesn't like Ondo, Chris? It's because he has bags of maple, which does almost the same thing. And he's just like, why are they not better? Or why are they're not a higher price? Is a better way of putting it.
Hey, I got in on maple too, so I'm riding the maple train. I want those pancakes. But the other thing I saw was your goldfinch, and I was impressed by those numbers. But it's even smaller TVL than maple was when on that example you were running. So I didn't go as heavy in goldfinch, but I'm in it. So.
Yeah, it's I just think I'll be able to get a better price appreciation with others. Last time I checked, Ondo was the top dog in the RWA category.
Yep.
Expensive.
And as we go into, like, eventually the Fed's going to start lowering rates. I think that's going to affect Ondo negatively. The bond markets and that whole fixed income market is doing really good because we're in a high rate environment. So I'm kind of trying to stay ahead of the curve as well. Whereas something like Pendle, it's more market agnostic because it's not really dependent upon that. So that's kind of how I look at it. And then the whole private credit narrative, like with the Maples and the Clearpools and the Goldfinches, as we go deeper into the bull market and rates start to get lower and people start to take a bigger risk on approach, it's just going to make people more credit worthy, and it's just going to be a positive reinforcement cycle. So I just think that how things are lining up in the economy and the world, Ondo they're not in the best position, but they do have a lot of things. Like I've heard things thrown around with them in BlackRock supposedly working on stuff. I don't know how true it is. But nonetheless, tokenized treasuries is going to be huge, and they do seem to be the leading horse in that race. So I think no matter what, they'll do well in the bull market. It's just placing my bets where I have the most conviction. That's all.
Yeah. So back to the original question of the best place to borrow and lend Ethereum. Would you say still Radiant is the best, or would you still stick it on Aave?
If you're bullish on Radiant, because you get to own the token, you get to earn a yield on the token, and you get paid to lend. Many smart contract audits, I trust them. But if you don't care about none of that, Aave's the best, 100%.
Yeah. So for Radiant, I wasn't planning on looping at all. I was going to use zero leverage. I would just lend one time, borrow maybe 30% max, 40% max, use that 40% to go trade with. And then that way I would never have to sell any of my Ethereum. And as I farm the rest of my farms, I just keep adding to my bag at Radiant and making sure the DLP stays at the 5% or probably 6%. So
yeah, no, that's not a bad idea. And then so for you, you said you're going to be borrowing to go trade with. What's your time frame on that?
Forever. Like I have no actual defined time frame for how long I would be out farming.
Yeah, Vincent, you actually, Vincent, keep going down your line of reasoning. I'll say my
No.
Yeah, I was going to say if forever, and I know what you mean by that. If forever is the time frame, I would say Radiant's probably better. It puts a lot less pressure on you, and I say that because I know your situation and you're trading for your company and for those people who lost money in crypto. So you don't have to perform as well because on Radiant, depending on what you're using as collateral and what you're borrowing, etc., you get paid to do it. So it kind of just adds to your trading versus on Aave, you're automatically in the negative because you have to outperform your loan and then you're breaking even. So that's how it looks.
Yeah, well, definitely on Aave, you have to have a lot more lending than borrowed so that the rates will be self-repaying. Otherwise, you will be exactly like you said, paying to borrow. So that's why when I'm borrowing there, I turned on enhanced mode at first because you can borrow up to 90% on your stable coins because it's stable to stable borrowing. And that was enough just to kick off the farms that I needed at the moment. And the farms were vastly outperforming the negative that I was getting because I was utilizing so much of my lent stables. But now it's starting to repay itself. And then now I don't have to have any extra farms to make up the difference. I can just have all within the platform pay itself off over time.
It's not a bad idea. You could also do a mixture of two where you split your bag into maybe 60-40 with the 60 going on Radiant and the 40 going on Aave. That's also another option you can explore because there will be times where volatility will make your DLP go over 5%. You might be asleep. So you'll end up paying a little bit unless you just really, maybe go up to 10% or something like that, which I wouldn't imagine that you would do. So yeah, if I were you in your position, just to be safe, I would probably do a combination of both.
Yeah. Do you turn on the auto lock feature on Radiant where it'll automatically bump it up over 5% if it falls below 5%?
No.
Okay.
I don't like most of the auto stuff, to be honest with you, because you just never know what can happen, man.
Yeah.
I could be bridging some ETH somewhere and you not have a lot of ETH in my wallet and it goes and now I don't have any gas and I might need to do something real quick and now I need gas and I'm just
yeah. But so cool. I'll probably set it up that way. That's helpful. If you have a moment, I talked about reducing the number of farms to get the same results and how I automated it all with Aperture, even through the ups and downs with Aperture. But I mean, their fee structure. I had I think his name is Click, is his screen name on Discord. Float.
Oh yeah, I thought so.
But but I was chatting with him, and I was like, dude, I need a way to stop this from rebalancing. And based on your description, the time weighted average price setting should allow that to not rebalance so frequently. And they said, well, that's not really how that was designed to work. I said, well, then you need to change your description, because it obviously says that setting is there to help liquidity providers smooth it out in times of high volatility, but it's not doing that in practice. Like high volatility, it's rebalancing every 2 minutes, and they don't have a global pause button that they should. Like for everything in your wallet, if it's on Aperture, they should have a global pause button to just immediately turn off everything that's going on in Aperture. But they don't. So you have to go into each position and hit pause. And I have automations running on over 50 farms right now. So like it took a minute to go do that.
Wow.
So, and they're all different portfolios, just in case you're wondering. So, but we're going through, and I was working with them. He said the very next thing that they're going to develop is a new setting in Aperture where you specify a time frame for how frequently it can rebalance. So if you say, I don't want this to rebalance in less than 6 hours from the last rebalance, they're going to put a check in there. And so they're going to go up there and they would go the trigger, oh, it needs to fire. And then they're going to check in that time setting and say, has it been 6 hours since the last rebalance? Yes. Then we're going to go ahead and rebalance. No, we're not rebalancing. So it'll allow you to manage how frequently it can rebalance, even if it keeps you out of range. So that's really going to save on fees, because on one of my positions, the wrapped ETH arrow, which I love, it's a moneymaker, but it rebalanced in a period of 48 hours. It rebalanced 37 times. And every single rebalance, the way I have it set up by default, is it purchases just 10%. But on that 10% that it purchases, it's charging the 0.15% plus 15 cents on every single rebalance for the traded amount that's being swapped. So I calculated it. It cost me $85 in fees for that entire rebalance scenario.
Yeah,
because
that's terrible.
because I put the time weighted average price of 6 hours. I did not want it to rebalance more than 6 hours, but it didn't work that way. So I'm out all those fees, and they're like, "Sorry, it wasn't programmed that way, but we're gonna fix it, or we're gonna make something else so it can work that way." And
that's like upsetting, man. Because they just doubled their fees recently too, and over the past month.
Take care, Chris.
Sorry, guys, I gotta roll. I'm sorry about that, but yeah.
Okay. All right, Chris. Good seeing you, man.
Peace.
Yep.
But over the past month, I've been speaking with Click from Aperture, and we were discussing creative ways, because here's the backstory. Like, on the reason why they charge the fee is that they have of course they lease the API from 1inch, but every time you click the plus or minus on your ranges, it fetches a new fee, or any change in the quote, it fetches a quote for you. And every time it does that, it charges Aperture. So they say they pay a lot of money to have that done. So we're looking for ways to make it cheaper, but not only that, on ways to fix their fee structure. And I've been working with them for a month, and we discussed some creative ways to do it. And then they go ahead and they come back and they say, well, we're going to do, maybe we'll do a rebate program where we give a user, depending on how much volume they do per month, we give them a 20% discount or a 20% rebate. I'm like, okay, well, how does that work? They're like, well, they send us the wallet address and then we'll send it to them every month. I'm like, man, that seems like a lot of work. And then they're like, okay, well, during this conversation, all of a sudden the fees jump double. And I'm like, it doesn't make sense, man. Like, we're talking about how to reduce fees for the user, and then you go ahead and double the fee. I just had this conversation with them yesterday. Yeah. And then I'm like, you guys are wasting my time. I'm sitting here discussing solutions with you guys, and then here you guys are just doubling the fees. I'm like, what? And they didn't even make an announcement about it. That's what's crazy about it.
And the
right?
the documentation, they did update it to say the 0.15, because I dove into the documentation because I'm trying my best right now to identify all the areas of liquidity leakage. Like I want to know slippage, the effects of slippage, how I can read the slippage on the blockchain. I haven't figured that one out yet. The gas fees, obviously, every time it rebalances. You know, the fees of any tools. I'm trying to identify every single penny that is affecting the pools, because what I'm finding is I'll get it rebalanced and it's still in range or whatever, but I take the current tokens that I have left at the end, and I will take them and multiply them by my original anchor point price, and that does not equal my anchor point. So like I'm out money. I'm trying to figure out why I'm out money, because all I'm doing is rebalancing the same liquidity. I'm not physically removing liquidity and I'm not adding liquidity. I put in $1,000 to work with, and I want that $1,000 to go up and down the scale. And, you know, at this point, depending on the number of rebalances, I'm sitting with like $800 equivalent.
Yeah.
And so I'm trying to figure out where that other money went and how I can measure it and manage
definitely. And what I actually usually do for anything other than Ethereum USDC, I just do a flat 0.3% slippage, even higher. Like if it's a less liquid asset. Ethereum USDC, you could get away with 0.2 or even lower, depending which chain you're on. But I do that to keep it simple. And then after that, you could say, okay, well, at most I could be losing this much to slippage. Now, where's the rest going if there's more losses on top of that, right?
Yep.
And yeah, that's the thing, man. That's why I don't do too many different liquidity pools, because they get more liquid as you go further out, and they have to be more passive. You know, it's funny. It's like with altcoin liquidity pools, I tend to be more passive with them, to the point where like they'll sit for months without me touching them at a time, right? Yeah, because you go in and rebalance it, you're losing easily 0.3%. And some pools, if it's a 1% fee tier, that's the 1%. You're gonna lose 1% on that swap balance. Well, that's also another thing that you got to account for. Not only the slippage, but the fee tier, right? And that's where it's going to hurt you a lot. And frequent rebalancing, it almost makes no sense to do auto rebalancing with them, right? It's more so set them up to where when it hits specific price points, to maybe widen out the range, but keep the same ratio. That way there's no rebalancing, or very minimal rebalancing.
Yeah, I was playing with that yesterday with the Solana positions.
Okay.
I was like, okay, well, I want to keep my percentage of tokens the same, but I want to widen out this range. So like when I was sitting at 125 as a minimum, I'm like, okay, I'm going to move my minimum to 118. But that means my maximum, I have to move it from 175 up to maybe like 250 to keep the ratio the same, so that it doesn't actually trade it. It just resets the ranges. So when you said that $500 was your mat, or that $800, I was like, that's got to be a typo. Like the 2 and 8, you know, they're in the same column. You know,
it was actually I did put 800, but I decided to go 500 because it wasn't much of a difference.
Yeah,
but yeah, that's exactly right. Because it's actually more beneficial to go wider in a liquidity pool. If, say, the price keeps trending one direction, you just want to go wider and wider. You don't want to wait till it gets out of range. Then you're kind of in a pickle, in a way where like you got to rebalance maybe a small portion just to get it back in range. But that's tough. If you rebalance earlier, you have more flexibility, right? And you could go wider. And it's actually better to go wider and stay with the same ratio than it is to rebalance too much of it and stay tight, right? Like for me, like unless you have clear, like very tight invalidation levels on, say, price, and you're like, okay, well, if price closes above here then it's invalidated. Then I'll get back into my original position or something.
Mhm.
You know, in times where you could take advantage of an opportunity to get super aggressive and tight on your liquidity pool, you can have a very tight invalidation level to not take on too much impermanent loss.
Yeah.
That's the only way that I would stay tight in liquidity pool is during those opportunities. Otherwise, I'll just keep getting wider and wider and wider, and I'll wait for that opportunity and get paid yield in the meantime until it comes, and then I'll get aggressive and then and farm those yields.
Yeah.
It's
What I'm able to do is I'm able to do no swapping rebalancing. So what I do is I look at it, and then I take out, I just remove liquidity, keeping the tokens that I get, and then I open a new position with the new range that I want, but I'm not swapping any of the tokens. I'm like, okay, well, the least token will allow me to get this position with this liquidity, and that's what I use. And then the next day I'll get those fees, and then I'll just close the position and open it again, because that's saving those swap fees every single time of the 1%, 1%, 1%. If you're in the 1% pool.
Absolutely, man. Actually, I'm gonna talk to Aperture about that. We just kind of had like a little, kind of a heated discussion in our DMs. But I'm gonna reach out to Click again and see if he could do something like that, right? Like say, hey, is there a way we could have it to where like when it hits our trigger price, it could widen out the range to like doesn't matter what price it gets as long as it goes wider and keeps the same ratio.
Yeah, that would be beautiful.
And then on the opposite swing, when it gets when the price trends back the other way, if it hits a certain price, it could get tighter with the same ratio, right?
Yeah, that would be awesome. And the other thing that they really need to do is allow you to harvest. I am so tired of when they rebalance, it forces you to compound. I don't want it to compound. I want it to spit the rewards out to my wallet. That's what I want.
I agree with that.
Yeah, man. I agree too, man.
So
they said they're working on it. I don't know. They haven't figured it out yet.
Tell them to go talk to the guys at VFAT. They already figured it out.
Oh, did they?
Yeah.
Oh, yeah, they did. Yeah, they did. I don't like their auto compound setup. It's just
it's
takes on
clunky.
a lot of IL.
But what I do like about it, from a management of multiple pools on multiple wallets, is I can assign the harvest token individually on every single pool. I'm like, for this wallet, I'm using the harvest token of USD plus. For this wallet, I'm using the harvest token of AXL USD. On this wallet, I'm using this one. So I can easily go just look at my wallet and see what the rewards were for that day, just to ensure that they're not part of any of the tokens that I'm actually farming with. So it makes accounting a whole lot easier when you're able to do something like that.
But the thing with VFAT that I don't like is that, you know, I'm complaining about fees on Aperture, but they're like almost 1/10 of the fee.
Yeah, VFAT's expensive.
Yeah, it's like
expensive. You're spending $900 every $100,000 that gets rebalanced every time it rebalances. Yeah. So that's all we're going to be aware of, right? That's a lot of money, and that's a lot of yield to generate to overcome that too. So
but you see so many people out there promoting VFAT. I'm getting 2,300% on this pool, and I'm like, yeah, but that's one tick wide. And then like you have that one tick wide, it's going to be there for 15 seconds. You're going to be out of range. It's going to rebalance you at 0.9%, and then it's going to be the next one tick.
And that's what people don't pay attention to. Not many people look at the lower part of the quotes where it shows the protocol fee. Everyone disregards it. They see, oh, it's only 0.9%, not even 1%, right? So, but
I'm literally about to do a video.
Compounds, man. It compounds, like Warren Buffett says, man. Compounding. Yeah, well, he doesn't say anything about VFAT, but it's the opposite of what Warren Buffett says with compounding.
I would love to see Warren Buffett go V what? I would love to see that. But you have the compound fee, and then you have the harvest fee, and then you have the rebalance fee. Yeah. And like one of the rebalance fees I think is 1.8%. One of those three fees is 1.8%.
Oh yeah, that's the harvest fee.
Yeah.
The harvesting of the harvest fee. Because I was gonna set one up, and I saw the quote. I'm like, holy shit, 1.8%, and then your 0.9. Yeah.
Yeah. So all I use really for VFAT, I turned off their automation. I just use it to manage manual range adjustments and slipstream for aerodrome. I don't use any of the automation stuff just because it's too expensive.
Yeah.
But
You know,
one thing I also wanted to mention is when you were talking about choosing between Uniswap and Aerodrome, I was questioning the aggregators. If you just go to a swap space or a squid router or something along those lines, and you're like, I want to trade USDC on Ethereum for USDC on Base, where do those aggregators go? Do they go to Aerodrome or do they go to the well-established, well-published open APIs of Uniswap?
Who specifically? Like, if you mean any aggregator?
Yeah, generally speaking, most aggregators,
yeah,
in my mind, would use the API of Uniswap, and they would route the traffic through Uniswap. They would not route it through Aerodrome.
No. Actually, Dex aggregators, like if you're on Base, if it sees Arrow, you could even see the routes at time. Most of them will have the route. You just got to expand it, but it'll show you the route it would take. And usually it would go through Aerodrome. Like if I'm doing a ETH USDC swap on Base, it'll go through Aerodrome. I like to use the DeFi Llama is my favorite one. I also like odos.xyz. Odos. Those are my two favorite aggregators. And usually DeFi Llama can actually give me positive slippage at times. Especially when volatility is high. It's crazy. Like if volatility is high and I'm swapping on the other opposite side of the trade, where like if people are selling Ethereum and then I'm here trying to buy Ethereum, sometimes I'll get a 0.5% positive slippage. And
it's awesome.
And you make money on the trade just like that, right? And that's why I like DeFi Llama.
Sometimes when I Stargate, depending on where I'm bridging, they'll pay you to bridge too.
Oh yeah.
Stargate. Stargate is tied to Curve.
Layer 0.
Okay.
Yep.
Yeah, I haven't even figured out Curve. It's too confusing.
Like the last boss of the Dexys, man. Some robots built that. I'm convinced.
I was just looking at their soft liquidation, and I'm like, that's cool and all, but I don't understand the documentation you're putting out. So like, I don't want to jump into it.
Oh, it's like fucking reading Pi or something, bro. I hear they have this new feature where like you can get liquidated and get unliquidated if price goes back in, but same thing. I couldn't really understand the documentation, so I didn't touch it.
Yeah, I was just like, this is way too much. And then like I've learned to stay away from communities that are super fanatical. So like the Curve community is super fanatical about Curve. So I'm like, nope, they're drinking the Kool-Aid. They drank it a long time ago, and they're gonna die soon. So like I'm not in that community. So it's Marilyn Manson had something to do, or Charles Manson had something to do with, or both of those Mansons had something to do with that program. So,
I wouldn't be surprised, man. I really wouldn't be surprised.
but yeah, no, I've been working really hard. I've got like on my own personal portfolio. I used to have 25 farms. I've gotten it down to 11 now, and I'm using combining them, waiting for my impermanent loss to be break even or close to break even, so I can get rid of another pool and go into it. I've been taking on some portfolio management for some folks, and I'm using the same 6 base pools, not on the base net, 6 pools for all of their setups. So it's real easy to duplicate each of their portfolios with the same results. And I know that if I have to change the setups on this portfolio, I better go change it on all of them. And it makes it just really easy to get through all that in a night. Whereas before, that was not the case whatsoever.
Multi-day. By the time you get to the next day, you got to change up some shit again.
That's why I'm relying so much on Aperture and setting actually the little bit larger ranges, so that at the end of the month. And then I'm also helping manage client expectations. I'm like, as soon as a red day happens, I'm like, this is a red day, you're going to get less this month, and then that way I don't have to be as tight. And I am telling the truth. The yields are going to be less, generally speaking, on the red days when we get through it. But we're really expanding. I now have about 300,000 under management, and so
That's
people
good. Congrats, man.
people are liking what I'm doing. So to help with the repayment option for people, I am in talks with a web developer. He's building out my web front end so that we can move forward with that part of the plan to where people can buy an NFT of the project they lost in, like stable fund. They would validate with their wallet that they own that wallet. Then my team will go in there and calculate how much they actually deposited into stable fund and how much they were paid from stable fund. And that sets the repayment limit that they're going to be able to achieve. And then with the funds they use to buy the NFT, we put that into farms and we keep earning with that until they hit that penny of loss, and we return that money to them and say, you've now been repaid for that amount of your loss, and you cannot earn any more on this wallet anymore.
That's awesome,
and then they can do that. They can purchase an NFT for any number of ROI projects that they've lost in, and we'll have a way for them to submit other projects where they've lost, and we'll create NFTs for that and just grow it that way.
dude. That's fantastic, man. I'm glad to see it's growing. That's awesome, man. Yeah, like if ask questions, if you need help on management, or just like if you're trying to, I know we were talking on DM for a bit.
Yep.
But like anything you got, man, like just swing them our way. We'll be glad to help. Yeah, what you're doing is helping a lot of people, because a lot of people got hurt in crypto, man, last cycle. So
a lot more will get hurt this cycle. And I was gonna say, bro, if it's to help you expand, I'm happy to do a fireside chat and post a video on my channel to help get eyes on it.
That'd be great. Yeah, as soon as it's up and live and running, I want all the features to run and everything. But it's going to be a central managed community farm. So I'm not going to have a portfolio for each person with an NFT. It's going to be just one farm that I'm managing for everybody.
Like a hedge fund. Yeah,
Correct.
I recommend that's way easier.
Yeah. So anyway, I will reach out to y'all, see if y'all would like to help in any way. Because I really value y'all's opinions, and the research that y'all do is awesome. And then, man, I just the way that I did this Solana trade was only because of what I've learned from float. Like I said, I'm going to take this chunk of $5,000 USDC. I'm going to put it in a long-term trade with a defined start, defined end, and as soon as it hits that, I'm out. And I designed it to be 20% profit on the tokens plus all the fees along the way. So like that idea came to me because of float. So appreciate it.
yeah, like it's kind of dynamic. Sometimes yield is enticing, like APRs where you want to get super tight. But at times, we got to think that that's a yearly number, right? A year is a long time in crypto.
Yeah.
And sometimes there's opportunities where you can have very low point, or just like low risk opportunities, like on Sunday, where it was like everything was just tanking, and you're like, you know what? Now's the time to take a shot, right? And you could forego some of those yields in lieu of gaining some short-term appreciation, right? So,
yeah. Well, I look at it, I'm like, in one day, it went down, like the USD, the ETH I was looking at on base went down just about 21%. I'm like, I can have that back in 30 days, maybe 45 days, if it just goes right back up to the level. And I wasn't even a high level. It was where it'd been trading at for a while. So, I mean, you probably know that, like, you see your eyes close and you just see the ETH price chart there all the time. But I mean, I'm like, it went down 21% today. I'm going to buy some today, and then, yeah, I'll get fees on the way back up. But I'm really in that situation. I'm after the token appreciation to go right back up to where it was, and in a short enough time frame where I can say, look, I made 20% on this thing, and that's all that I'm really after. So the combination of the fees plus the token appreciation.
yeah, like when Solana was at 190, almost 195, I posted my position heavy USDC, and I even stated, I said, I really think it's prudent to be careful up here because it's kind of overheated. Look where it came from 120 all the way to 190.
Yep.
For a pullback, right? And the great thing about concentrated liquidity is that I don't have to sit out of the market and wait for the trade to come to me because at times you could get impatient or get in too early, take losses. And then, like in this drawdown, I would have been like taking stabs at like 150, then 130, right? And I would have been taking losses along the way. But with concentrated liquidity, I could reduce my risk, right? Stay in range, generate those yields, and then look for that opportunity to take advantage of an upswing, you know. So
would you still say that the best ETH USDC pool is on mainnet?
I'm looking like I was showing the liquidity distribution earlier, and there's very low liquidity on mainnet in this price range from like 3,200 down to 2,200. So you get like $1,000 of like low TVL. I'm really interested to see, like, let me look at the Yield Hunter tool, and I could see real quick. But it's
I've used that to. I'm testing out a find from the Yield Hunter tool right now of the wrapped Ethereum over on Polygon. So I was like, Polygon is getting that much wrapped Ethereum traffic in USDC. That doesn't make sense, but the numbers are there. So let me go check that out. And it's printing. You know, it's not printing quite as much as Base or maybe Mainnet, but it's still printing a lot for something on Polygon. I got people asking me, I want something on Polygon. I'm like, well, do that.
And like one of my vaults is on Polygon, and it consistently pays out great. Like just over the past year, it's just there's a lot of volume on Polygon, and it's actually kind of like a hidden gem that no one really pays attention to. But the liquidity is lower, and the volume, it just for some reason it stays under the radar. But when I have my liquidity pools on there, it's just like it's nice. It pays really nice.
Yeah, I would like it to be in some sort of range of a 10% month return, like steady.
Oh yeah,
10
there.
What's that?
That's the dream right there.
Yeah, it's not unattainable. Like several of them are doing much more than that.
I was thinking 10% per day. I was thinking about float lockers 4,000%.
No. I'm saying 10% a month.
Oh yeah, that's very doable.
Yeah, so I just want to have a couple of pools that are doing 10% a month. And what that would allow me to do is offer some of my clients the ability to have debt repayment plans. So I'm helping people get debt free as well. And so they come to me, they're like, how can I use crypto to pay off this debt? Like, for instance, somebody came to me and said, I just had to pay 15 grand for some plumbing at my house. Like, how can I pay that off? I'm like, well, the answer is put in 5 grand at 10% a month. Make sure you have 0 payments for 12 months with the plumbing company, but take 5 grand right now and put it in at 10% a month. And at the end of the year, you'll have your 15 grand. So you've just saved yourself 10 grand on that repair by putting it in here at a solid, easy to manage 10% a month return type pool situation. Nope. Vince got tired. And I think you might be on mute. I can't.
Oh, sorry. Yeah. I was on mute. I'm looking at the Yield Hunter tool right now, and top of the list, other than Camelot's like crazy, but it's automated. But Aerodrome is at the top right now at 346% for Ethereum USDC. And then Optimism is next, which is surprising. And that's actually the 0.3% fee tier on Optimism. That's 268%.
And what is that, wrapped ETH and USDC?
Yeah, all this is wrapped ETH USDC. Next is Arbitrum, the 1% pool, but it's very low TVL.
Yeah. When you use that tool, are you looking straight by APR, or are you looking for fees generated? How are you ranking them?
Just APR.
Oh, okay, gotcha.
Yeah.
There's also there's a website. I knew the guy who knows the founder. I just dropped it in chat. Stackit.ai. And it's supposed to help you like automate and repay your bills, like using Aave and stuff. You should check it out.
Oh, I have. So, yeah, I've been listening to him. He's having some app problems, trying to make it work for everybody. There's posts in his school community where people are having problems using it from time to time. I don't think he has real clean code. The idea is solid. So
Okay, fair.
yeah, you had given me that a couple times ago, but
Okay, good.
yeah, but he uses Stagit for everything. Like he's like, you got family bills, send them into crypto first. You got large loans, send them into crypto first. And so like keep on sending it in, and then take out enough to go pay your bills, and then keep on stacking that extra $20 a day into Bitcoin or $20 a day into Ethereum, and then eventually those will have enough appreciation where you can just pay off your loan. So hey, I've researched everything he's done. So.
People talk about like the performance of Ethereum and how it's nearly like flat year to date, but they don't take into account the amount of yield, the yield adjusted returns. And I'm part of different communities, and they've calculated that yield adjusted returns on Ethereum have outperformed Bitcoin, right? So it kind of shows, like, it kind of reminds me of like Ethereum's kind of like a Johnson & Johnson dividend stock, right? A dividend stock that doesn't move too much as far as price.
Yeah.
I mean, other than Sunday, right? But pays more in yield, right?
Yeah.
And that's where the reward is in Ethereum. And it kind of, people are complaining like, man, Ethereum is underperforming, it's not doing all this and that, but it's spitting out a lot of yield, and there's a lot of opportunity, and not a lot of people notice that, right? They just most people in crypto, they just look at price. They're like, I just need number to go up and I'm good, right? And unfortunately, it's going to get more sophisticated, and the old buying and holding and just wait for a number to go up to dump your bags is going to get harder and harder, right?
Yeah.
Especially as institutions come in, more liquidity comes in, it's going to be harder to expect those type of moves, right?
I mean, I just look at what is the token with the number one utility in all of crypto. My answer is Ethereum. Like, you have to use Ethereum for gas on most of the chains out there, some derivative of it. The most number right now of applications are built on mainnet. Financial institutions are pouring their money into mainnet because it's the oldest and most trusted. So like, that is total agreement with you, dividend printing type situation. So
yeah, I'm actually hoping they don't the institutions don't come too fast, because they're going to dilute our yields.
I know the days of triple digit yields on ETHUSDC will be over,
man.
Yeah, we'll just have to move to render. So
yeah, or Maple ETH. I'm sure
or Maple ETH.
Where's Maple? Did Maple have a big price drop?
It had a price drop. It wasn't huge. It did take me out of range.
You know what? The same range that I set up months ago, it's the perfect range. I think because they had that 50% pump a few weeks ago, because of, I forget the partnership that they announced, some large bank or whatever. The drop, it cushioned that drop a little bit. Had that not happened, I'm sure it would have went out of range.
Yeah, it's like, if you look at like the yearly chart over the past year, it's kind of like right at the bottom. It's a good buying opportunity, actually. I might pick some up after this call.
Yeah, well, they were like 1050. What's it right now?
13, 18.
Got it.
Dude, this is the range that I okay, it's gonna make me do this right when I turn on the camera. Okay.
Yeah, you're a human. Yep.
Yeah. So
I think so anyway.
I think so. I hope so.
It's like every time you come on the video, you're like, clap on, clap off, and every single time you come on video. It's like, get my game face on.
Yep. No, I'm like break even from where I got in. I got in around right here, and I'm literally at break even. So I captured all that yield. It went almost out of range, went out of range to the top, but like, this has been like perfect.
That's
like
the perfect scenario, perfect range right there. And that's a weekly chart. Holy shit! Yeah,
Exactly.
You've been in it for a minute.
Yeah, bro, since January.
Yeah.
Chris, when I did my one-on-one call with you, I was in this pool.
Yep, you were absolutely.
And I
And
haven't
I was looking at the Yield Hunter tool on or Monday for the Sunday night dump, and Ethereum or Maple ETH was printing 800, 900% APRs.
I rebalanced it and I just checked and I made like around $600 in one day.
And there you go. Time in the market, man,
Yeah.
because everyone wants to get excited when the yields are high, and then they dump out when the yields get low.
Yep.
And they just don't. If you have conviction in an asset and you really want to hold it, set up a liquidity pool, set it up kind of wide, and then you'll see you don't even have to touch it, man. It's just like you just let the market do the heavy lifting. Then you pay you out in the yield, and you do whatever you want with the yield, right? And you just chill, And like, yeah, there are times where I get aggressive on my farming, where I get very active, but then most of the time I don't touch them, man. Like I could go a couple weeks, a month without even touching my liquidity pools.
Yeah.
And
I went and took another note from you guys, and I just said, you know what? Sunday is going to be recovery mode, so I'm going to let my farming fields lie fallow. I turned off all automation. I set large ranges. If it had gone out to the bottom, I rearranged it so that the bottom of my range was the current token price, so it'd go up naturally. And I'm just letting it rise back up with zero automation for every one of my farms.
did you make that change this Sunday?
Yeah.
And then the market dumps.
Well, no, I didn't. No,
Like
I did that. I did that because of the Sunday dump. Like it was
Oh,
dumping,
because of the Sunday.
and all the farms started going. I'm like, turn off Aperture, turn it off. I'm gonna be robbed. I'm gonna be robbed. And then I went and then and I set up that strategy I just said. And so far everything's coming back up naturally, making some, decent yields without worrying about the automation. And I'm just gonna let it there. I think a lot of things have kind of settled into their new channels for the moment, so it'd be safer to tighten them back up a little bit. But just to be in the game and not losing, that's what I did, and it seemed to work out okay. No matter how you cut it, getting to 50 farms is going to take a minute. So
yeah, I can imagine the frustration, man. Especially like with Aperture, you got to go in and you have different you said you had different wallets, right?
Yeah.
So you got change the wallet, go in, and
yeah.
load slow,
like
oh
yanking your beard. How many
What's that?
times are you yanking your beard doing that? Is the question.
Well, so I measure that by inches of growth. So like I'm sitting here and I'm like, well, right now it's only about 8 inches. And then by the end of the night, I'm like, that's 12 inches, man. I've been yanking on this for a while.
That excerpt right there, if someone just dropped into the call, they'd be like, wait, what are you guys talking about? 8 inches, 12 inches? What? Stroking?
I didn't. I said, no, I said, yeah, I said yanking. I didn't say stroking.
Yeah.
I said stroking.
Dude, hey, Chris, like, is this a good time? Like when we have our calls, is this a good time for you? Like, it'd be good to have you like on the calls, like every when we do these group calls every couple weeks.
Yeah, 1 hour later would be better because
okay.
Yeah, my son's in football now. This is his first year in football.
What state
Texas.
are you in?
Texas.
Okay. Yeah, Mark, who's over in near Europe somewhere. It's just like 4 a.m. for him. He really wanted to be on. So maybe the next one we'll do a few hours later because he did have some questions.
I'm down. Like I'm anytime. Like I mean, not too late, but like I could do like 9 p.m. Pacific, 8 p.m. Pacific, 7.
Yeah, let's do the next one at 9 p.m. because and I'm down to do it next week, honestly.
Yeah.
Because I do want to like answer his questions and stuff like that. So yeah, I'll be down for that.
Okay.
Maybe we should do another poll in the group, like asking people like comment what's the best time, and we'll aggregate around the most common ones because there was a few people who I wanted to jump on.
Yeah.
So yeah,
a lot of people at 5 p.m. Either if they're working, getting off work, or it's tough. People go to the gym after work or have obligations, but like later in the evening, could work for more people. So,
Wait a minute. Wait, did you say the G word, like gym? Is that what you said? Like
Like, what is that place?
I'm
I've
sure
been in the gym.
triceps from pushing the beard down.
Well,
So
that
thank-
and then I have a way to thread in a 45-pound weight so I can do my shoulder shrugs. You
There you
know,
go.
it's all good.
There you go. Well, I guess before we wrap up here, Jebediah, did you have any questions, man, that you wanted to ask?
No, you guys are killing me. I'm just sitting here dying. No, it's all good. I mean, the only thing I guess I've really been thinking about is kind of, talking with Float about going super, super wide. I remember a while back, like, I don't even know, it's been a long time ago, you did a post where you kind of, shrunk your LPs back up and like stair stepping, and you had like all these different ranges outlined where kind of like stair stepped it slowly back up. And I think I'm starting to understand that now, but at the time I totally didn't understand it. But I don't know. I mean, is that something that would come back into play now, do you think? Or because I was thinking like as I start to shrink that back up, because I'm like as wide as I've ever been now.
Oh yeah.
It's like as I pull that back in, I was thinking I was just going to be watching price action and going off of that. But you did a post where you already had like 10 different moves all pre-planned. I'm like, well, how can you do that? It's like can't be price action based. It's like I don't know.
No, yeah, it's based on impermanent loss and just like price trends in one direction, so I get wider and wider and wider, and then like an accordion, and then as price mean reverts and gets back to those price ranges I rebalance, I'll just get tighter and tighter. Sometimes I'll just leave it wide because I'll like, well, if I get tighter, that means I'm going to sell more of the asset if it continues up. So maybe I'll just ride out this run. And it's, salt to taste, right? Like if you're like, okay, well, I would like to get a little tighter now. It's back at this price range. Let me get tighter. And then if it trends back down and you need to get wider, you just get wider again, and that's how I manage it, right? That way I'm keeping price in range and also continuously earning yields in the meantime, right? That's pretty much it, man. That's how I look at it.
Awesome.
It's very, very simple. Just like very systematic. It's just, staying like a robot, right? Like just go in, it hit this price. Okay, I need to get wider. Boom, just do it. I try not to rebalance too much. It's very minimal. And then if price returns back, I'll get tighter again, tighter, and then and I just go off like that, right?
Yeah, that's one of the things I picked up like just now is how you're talking about rebalancing based on the ratios, right? To where you're not even really rebalancing, you're just widening up everything. That was pretty cool.
Exactly. And then there'll be times where I've done it a couple times where I'll take a shot, like I call it like a side quest, where I'll say if I'm like most of my liquidity pool is Ethereum, I'll sell it, most of it, and then go USDC to take advantage of a possible down move. And if it invalidates, my risk is very small of impermanent loss, like either 1% to 2% risk, and then I'll flip back to my original position if I'm wrong. But if I'm right, I buy the dip, right? And I recoup or earn, I guess, like an impermanent gain, right? Like it's a way to like earn and not be as exposed as I would have been, right? And
no, that's making a lot more sense than it did a couple of months ago. I'm catching on.
Yeah, actually, Jebediah is working. He's working on a spreadsheet. It's actually pretty good. There's still a couple things he needs to iron out, but it's able to it's able to import all your liquidity pools, and then you could. Then I want to work on a dashboard for it. It'll import it straight into a spreadsheet, and then we'll have a dashboard. We'll have metrics, like your IL, your impermanent loss versus holding, your performance, your P&L, yield earned, all that, right? So, he's working on that right now. And I just think like your spreadsheet is probably ahead of any other tool that's currently out there, because APY Vision, they shut down they shut down for maintenance, right? They're creating their new archive protocol, and I'm helping them beta test over there. But there's still like issues over there. Like I've caught some issues that just by luck, as far as like some of the rows don't have the right data, or like the data is just messed up in one. It's not messed up, but like it's not correct in one row or in one column, and it totally throws off the numbers, right? And if you have those issues spread out throughout the whole spreadsheet, your numbers are completely messed up or skewed. So it's
scary.
So they're working on that, right? They're working on ironing that out. And right now there's no APY vision because they closed it down. So it's like, oh man, what do I use? Right now it's just all manual. So
can I share my spreadsheet with y'all? Would y'all like to do it?
Sure.
Just let me see, and then I need to do window right there. Sure. This is my my Pendle pool. So Vince was talking about Pendle. So I don't know. Don't share your entire screen. Okay, dismiss. All right. But so basically what we have is we have our entry anchor point highlighted right over here. So when we opened up this pool on 6:30, this is the price of Pendle, the price of ETH, and how much of each token we bought. We have DCA'd a couple times, so this is our DCA price at the moment. We recalculate our DCA anchor so that we know that the Pendle DCA price is still 507, but the ETH DCA price has come down because we keep adding ETH. And then on top of that, we have every single action that we've taken on this, over time. So we got in on the 30th, and then we did an action on the 7th and the 11th and the 14th. And then these were the token prices that we got on those particular days. Like on the 7th, we got 0.24 Pendle, we got 0.0033 ETH, and that was $1.86 in fees. Our daily percentage, the number of days since the last action that it generated those yields, our impermanent loss calculator, we have it tied up to add or remove liquidity as we do, and then we keep track of our token counts along the side every time we process that. So at any given moment, we can look at it and go, okay, well, in this range from the 7th to 11th, we only generated like 2 pennies, and we had to do a midweek change. And then once we'd made that change, we bumped it back up to 0.57% a day for those next 3 days with the change in ranging that we did. And then we let that ride for another 2 weeks without touching it, and we still got 0.26% a day on that range. And then we just processed it again after a week, and because of the market and everything, it went down to 0.1. But anyway, this is how we're teaching. I'm teaching my staff to keep track of all their different pools and everything like that, so they can learn all the different aspects to take a look. I have a consolidated master portfolio view that I use certain aspects of it to just the metrics that I really, really want. But for somebody just learning yield farming and whatnot, this would be all the different areas. And then this is where we keep track of like rebalances if we wanted to see about how the prices change and what we might have lost in the swaps. And then as we add or remove liquidity, we have that set up right there. So anyway, it's our spreadsheet. That's what we do.
Yeah. And, imagine having the data, the ability to have the data just, what is it? You can grab the data without having to manually type it in, right? Like say you could just wait once a week, right?
Mm-hmm.
Pull the data, have your staff fill it in,
Yep.
and that's it, right?
Yep.
It'd be nice to have, instead of like, because you got to do it every rebalance, right? You got to go in and type, pop in all the data, right?
Yeah, every rebalance or every time we process rewards, it forces us to really look at the pool and see what's going on. But in all reality, it takes 3 minutes for one action to put this in here. So that does add up over time. But if you have one portfolio with 5 pools, you're talking 15 minutes, maybe once a week. It's not that bad.
Okay.
But I would love to have this at scale where I could do it for all 50 of my farms at once, and then I can just go and review them. That would be so nice.
Absolutely, man.
So, but anyway, that's generally what we do for one pool. So the only thing that I would like to add to this one, which I haven't yet, is like, okay, on this one I had this much slippage and I had this much pool swap fees paid, and I lost, because I want to add that to the impermanent loss as like how much fees I've paid to know that, you know, okay, well, I've been in this since June 30th. It's now 8/4, and I've lost, you know, $115 due to fees. Because if I take my token count on this day, this 171 Pendle tokens, multiply it by the price of 507, I'm not going to get back up to, well, I've DCA'd a couple times. Anyway, you know what I'm saying? I'm not going to get back up to my entry anchor point because of slippage and paid fees and all that.
Yeah.
And that's the issue I'm trying to solve. Like, where is the money going? So how do I know how to adjust my anchor point to make sure that I'm really at a true profit when I close the pool?
Absolutely, man.
It's like a mystery. It's like, even if the token price of my current tokens went back up there, I'm still not going to be at my anchor point. Like, why not? Because I haven't added liquidity. I haven't removed liquidity. I mean, in this case I did, but the rest of my pools,
Yeah.
I haven't, and I'm out money. And where to go?
DeFi is the liquidity is fragmented, man. It's not very liquid. That's why the yields are so high. And if you have the time, you know, I don't know, like, you know, I know you're managing a lot, but like if you do have time, you know, do single-sided LP rebalances, you know, like one tick wide to let it rebalance, and then use aperture to close it out, right?
Yep.
And then go in when that's done and set up the new liquidity pool, you know, and that way you avoid what's the tier fee or fee tier you're in on that pool? Is it 1% or 0.3?
That one's 0.3.
Okay, so you save that 0.3%,
Yep.
and you save slippage, right? And you earn a little bit of yield on top of that. So it could be worth it, you know. Yes, it's an extra step, but it brings in revenue.
But that's okay, because what I can do is take the fees from that day and plan tomorrow. I'm going to close a position, open it again. I want to have like 50-50 tokens on hand, right? So I'll just go ahead and plan that tomorrow I'm going to go ahead and do this. And then I can set that trade up now, and then by tomorrow when I need it, the trade's done and the tokens are sitting there. So as long as you pre-plan it for the next day.
There you go. And yeah, you could take the liquidity that doesn't need to be rebalanced, and set up the liquidity pool. It's already generating fees.
Yep.
You wait for the rebalance to get done and pop it in. Yeah.
Yep. So definitely you can do that.
Yeah.
Hey, I like brainstorming. It's good. I like it.
You might need or just hire someone to do it for you, like a VA.
I would not trust a VA.
Yeah.
Like, I don't know. I wouldn't even trust a VA to fill out the spreadsheet with the quality of VAs that are coming out these days.
Yeah.
So, ain't lying, especially giving them wallet access.
Yeah.
Yeah.
I'm like, if I can reliably get a VA trained that can describe to me how to read a blockchain explorer, I might think about letting them do the spreadsheets. So, but good luck with that one.
All their info, you know.
Yeah, if they can do that, they probably won't be a VA.
That's right. They'll be like, we had so many people apply, and I have to run after this. I know it's been really late for y'all too, but we had so many people apply. Like, we posted on FreeUp, we needed some more bookkeepers, and over 2/3 of them were agency owners of bookkeepers. And we specifically said on the listing, no agencies. We want to hire an individual person. So like the person that went on for the interview, like say from India, they interviewed very well, knew it all, everything. And then we asked them a question, are you going to be doing this work? Well, yes, I'll be doing the work. Next question, how long will you be doing this work? Because they will do the work for 6 weeks, make sure it's set up and rolling and everybody's happy, and then they pass it off to somebody else.
Oh man.
The name of the game.
So
Cool.
Yeah, I'm sure they have like farms of VAs, right? Like,
oh yeah.
just
All I can think is Slumdog Millionaire, man. I mean, if the conditions are really that bad over there, they have 10,000 people crammed into a classroom waiting for work. So,
Yep. Yep,
So-
those are the people that they pay to like post and get views on videos and stuff. I remember
Yeah.
seeing it in Silicon Valley startup.
did you
You
see?
know, like-
There was a post on Medium. There was a guy. No, it was on Twitter. He made $300,000 in an airdrop because he hired a bunch of VAs to stand up individual wallets, and his team of VAs stood up 10,000 wallets
Wow.
per particular airdrop. And he
Holy-
says, and then I gave them 10% of my earnings. So he gave them 30,000. They were happy, and
wow.
he kept the other 290,000.
That's not a bad business model.
I think we need to explore that avenue.
Low key. Shit. Yeah.
Cool. All right. Well, guys, I'm down for next week as well. Like, if I don't know if it matters on days of the week, but like Monday, Tuesday, Thursday would be my best days. But I'm up Monday, Tuesday, Thursday.
Yeah, we'll do a poll, and then everyone posts under there. That way we can get the best time, so most people can show up.
and we'll
Sweet.
do it at 9 p.m. next time.
That'd be great. Yeah, that way I wouldn't have to rush.
Yeah.
Cool.
So,
Yeah.
All
All right,
Well,
It was a good chatting with y'all, and yeah, I'm excited for the next one.
awesome. Yeah, I learned a lot. Next month or next one, hopefully I'll be able to report back that I opened up some more on Radiant. So
Hey, looking forward to hearing it, man.
Awesome.
Just know if you have any questions in the meantime, though. Seriously.
I will. I'll throw them in school.
Sounds good, man.
Thank you much. Talk to y'all later.
All right.
Y'all
See you guys.
have a good night.
Have a good night, guys.
Peace.
Bye.